What should we expect from the U.S. economy in 2024, and how should investors be playing it? Today we're talking with Barry Knapp of Ironsides Macroeconomics. Barry, welcome.
Thank you.
Well, what should investors be looking at in 2024? Is the recession finally going to come?
To really get a sharp so-called hard landing recession where earnings will plunge 30% like they did in 1990 when the savings and loan industry collapsed, or 2000, 2001 when the tech bubble burst, or of course the global financial crisis when my home at that time, Lehman Brothers, went under. You really do need real and nominal growth to go negative, and you need a serious problem in the banking system. Now we have a problem in the small banking system. This is why I do think the Fed is going to need to cut a fairly significant amount next year. So there is some chance that we could get the unemployment rate to rise well above 4. We could get consumption to slow closer to 0, but there's no real debt leverage in the household sector. They spent 15 years paying down their mortgage debt. Their effective mortgage rate is below 4%. So there's really not the kindling for a hard landing, big earnings decline.
You haven't mentioned the jobs market yet. What is your feeling about that? And it's interesting, that seems to be the thing that a lot of people are hanging their hat on when it comes to predictions.
So I do think the unemployment rate is going to go well through 4%, and that will be the trigger for the Fed ultimately when they start missing on their employment mandate. That's when all the new Keynesian economists that came out of academia will be going, oh no, this is a real problem. So I actually thought there was a chance we were going to get that on Friday. That created a little bit of a setback. I had to push out my forecast for the first Fed rate cut from March to May. And within that environment, the market was expecting the policy rate, Fed funds rate, to end next year closer to 4%. In September, the Fed said, no, it's going to be above 5% for the next 15 months. So that crack up is, to me, likely to cause a difficult time for both stocks and bonds at the beginning of 2024. We're sort of basking in the year-end seasonality, Santa Claus rally, environment right now, but I suspect the first big move out of the gates next year will be down. Last year I thought it would be up. This year, the opposite.
So what is an investor to do in that circumstance? How do we position ourselves in 2024?
Until we get that Fed pivot, I'm avoiding small caps. I'm avoiding small banks. I'm calling it market weight in technology, but if you're market weight in technology in the US, you have a big exposure to technology. So I would not be underweighted. I do think if we can get to that point where the labor market deteriorates, we have a correction, the Fed pivots, then you can start to broaden out and buy smaller banks. I do like energy stocks, industrial companies because of the manufacturing renaissance in the US. We underinvested in capital physical plant for more than a decade, actually 2 decades. That has changed. So industrials, materials, energy, to me, are attractive cyclical sectors. Getting involved in small caps or banks, I think it's too early until we actually get to that inflection point. And I think you have to stick with technology and technology related. By technology related, I mean communication services and consumer discretionary. Amazon's a big part of consumer discretionary. Not recommending Amazon, just using it as an example. So I think you're okay in those sectors. The more defensive sectors, staples, utilities, they're not particularly cheap. So it's not really a great place to go hide out. The healthcare sector is the fascinating one because I do think they are going to really start using technology to deliver more efficient healthcare services. But the sector really struggled last year with the weight loss drugs and implications of those weight loss drugs for the rest of the industry, for a whole range of pandemic-related fallout issues. That's a sector to keep your eye on. I have a strong secular view, but so far I've been kind of early on that sector.
So hold the line on tech, go in on industrials, look out for healthcare.
Pretty much.
Thank you so much, Barry.
You're welcome.
Check out qz.com for more.